investment drive is a critical subject against macroeconomic challenges. However, there is hope for a turnaround as concerted efforts to a fiscal and monetary policy consolidation and to boost investments and productivity, paving the way for a return to high growth path. To discuss this, I'm being joined by the Adedikpe Associates of Nigeria Limited, Dr. Biodun Adedikpe. Good afternoon, Adedikpe.
Good afternoon, Tolu. It's a pleasure to be here with you. Let me also say a happy prosperity to you, colleagues.
Thank you so much, sir. We appreciate that. Well, a lot of figures have been on Nigeria's expected growth rate. But I want to start with forms that we've talked about for some time, and many say that it should take us to where we should be. What do you make of the fallout?
Thank you. Very good point to start from. Now, to start with, an outlook on the Nigerian economy for 2024 has been, yes, to start with, and on account of these reforms in the sense that these are the necessary things to do at this point to achieve what we have been clamoring for, and that is sustainable growth and also sustained. That means we get it to create, we also get it to go into a trend that can be sustainable. The key pillars that will enable the economy to grow in the subsequent years. So everyone is of the same opinion and in the right direction, and therefore there is a positive expectation with respect to the Nigerian economy this year. Now, for our own research team in BA Consult, our own view is that the economy will also grow in the range what the World Bank projected and what the federal government has in no budget expectation. And we, in our own expectations, we are looking at about 3.47% in 2024, which is a positive departure from what we ended 2023 with. Positive.
Naira is at the moment receiving that battery from the greenback, or how do I, I know you'll be able to explain, but there is this, after the liberalization of that market, if we will say when demand and supply run that market, someone even reported 1,420 as at yesterday. Dr. Adedikpe, how we continue like this? It's scary, and some things this might even get worse. I want your understanding of this.
Okay, now I don't see it getting worse, and this is my place for that, which of course is coming from looking at evidence of data, and they're building a story from developments recent, and also what is expected in the rest of the year. Now, the first line in our argument is simply, whenever there's a movement in price because of the exchange rate is a kind of, it's the price you pay for a unit of a foreign currency, by the way. So in which case, when the market begins to move, there is a new equilibrium set where demand and supply will get to a point and you have a kind of normalcy in the market. That new equilibrium is the region which we are operating right now. And why do we say that? Now, there's an interval of supply and demand primarily driving the price in the market. Then the question is, what happens to supply going forward in 2024? What also happens to the foreign currency going forward in 2024? And that is where the real story comes out. Number one, when you look at our merchandise trade, especially the data for 2023, January to September, you find that what we paid for merchandise import relating to petroleum products was about 39%. In which case, with refineries coming on stream in 2024, to a large extent, that portion for demand for foreign currency will drop from the market. So that brings space to start with respect to demand. It means demand will now be driven by the realities of the market, not because it is managed administratively by the central bank. Because as we are now, Indian has made it very clear, we are going in the direction of orthodox monetary policy. Of course, it means most of these prices will be driven by the market. So that is given. So if demand reduces because a large chunk of what we used to spend on imports, is out of the market, that brings a positive signal on the one hand. The other one that most of our analysts are not talking about, if you look at international data post-COVID, that is since 2021, you'll observe that there is been what you might call polarization and a shift of some major manufacturers to the markets where they have most of their customers. So you have, for example, just to illustrate, a Chinese manufacturer in Nigeria now sees that its market in Nigeria is significant in its global market. So he decided to put a factory in Nigeria and then produce locally, as we call it, to meet the demand of the Nigerian market. Now that is happening globally, not just Nigeria or in Africa. It's happening globally. So we call that phenomenon new manufacturing that is evolving in Nigeria. Now that also means that demand for input finished products we shift to effects to import inputs, raw materials, and other intermediate goods, which is value for value. That means what we require to spend on the importation of those materials will reduce in value. So that also will temper the demand in the FX market. Now, on the supply side, yes, no doubt, foreign investors have been tentative of making this point since late 2022 and early 2023. It's tentative. So the question then is, which other sources do we look at for, foreign inflows? Primarily is still coming from oil. That's the reality is 89% thereabout of our merchandise export 2023 was hydrocarbons. All right. So if that is it means the traction we are gaining in terms of oil production, going from 1.3 to 1.37 in November, you now add the condensate of another 200,000 barrels per day. That gives us 1.5 million barrels per day that is available. Now take out what we provide for the refinery, which is about 450,000 barrels per day. That is also, an export bucket that is between 1.1 and 1.2, which is an improvement over what they had in 2022 and also in 2023. So if that happens this year, that means also earning from oil will again improve. Now put that side by side with the expectation of crude in the international market in 2024. Yeah, the Chinese has provided growth for the world economy in the last 46 years, thereabout. And the challenge with the world market has been slowed down in that particular segment. The expectation is that what the Chinese government has done will also make the economy to at least pick up this year. If it picks up, I would say an Indian economy and also ramps up this year, expected at about 7%. It means the demand for hydrocarbons also tick up this year, which means the price of crude oil will also remain stronger than our budget assumption. So the interplay of all of this will also supply, in addition to the various efforts that the presidency is making, encouraging foreign investors to come into Nigeria. So if that happens, then we expect the FX market to stabilize toward the end of the first quarter, later of the second quarter. Now expected later in the year to actually appreciate.
Well detailed breakdown there, and hopefully things play around and get to this point. It's important, Doc, I will say, you talked about investment drive. Also, the CBN governor mentioned yesterday that if the refineries as expected on board, that could also affect energy prices or petroleum products in general, and that would also have a positive impact on our FX. But that investment drive that you talked about, Is Nigeria really open for business? Your thoughts?
Okay, thank you so very much. That's a very good question. And I can respond to that, not because of a sense of patriotism, but as someone who not only interrogates what is happening in investment space globally to start with, and also specifically in Nigeria. So, and the question is, are we going in the direction that is improving the investment climate? I would say yes. Now, on hand, if you look at the 8-point agenda of President Tinubu, one of the is to encourage investment with respect to rule of law, background, and of course, making capital, get the risk that is adequate for the risk involved in the investment. So now, if you look at all of those and the significant statement, let me call it ultra, the president some time ago, and I've been saying that in different ways since then, and that the fact that Nigeria is ready and is welcoming investors. And that is why I was meeting them, either they come here to see me in Nigeria or travel south to them. It's the same story. Now, in reality, is that the president is the number one marketer of Nigeria. When the number one marketer gets involved in marketing, by all means, you raise the believability of the story, and you also get response that international investors will have. So if we look at that and the positive impact of it, means we are making the right calls on the one hand, and already we are having investment to that, which means it's a matter of time before we start ticking the boxes one after another. Those foreign investors actually coming with foreign direct investment. That's on the one hand, at the stock market. There are some of my friends and colleagues that maybe there's a problem in that. But again, we lose sense of something here. The sense is that this stock market is a lead indicator of what is happening in the economy. So usually we say it's lead indicator of between 3 to 6 months. So if that market is growing, is strong, for the index crossed the 101,000 points only yesterday. So that is what is happening there. From the beginning of this year up until now, it has grown strongly by 30. Okay, for 2023, it grew by 45.05% thereabout. Now, if you look at that, that is a pointer that those who invest in that sector, which is the organized private sector, by the way, and the economy will continue on a strong note. We get stronger, and so the entity that they buy their stocks also will generate more money. Also, the performance of those stocks is part of the elements that are driving improvements in their prices. So if you take these two perspectives, yes, the local bourse dominated by retail, mostly institutional and individuals, and of course, the foreign leg in terms of marketing and mobilizing. There's every likelihood that Nigeria creating an environment conducive for investment, as we see that traction as we go into 2024.
We expect an MPC meeting February 26th and 27th after a long wait, many will say. And that's also going to shape the direction, of course, for investors' decision and all of it. So, Dr. Adedepe, I know you can tell us, what do you think would be on the front burner? We know, yes, CBN wants to manage our rate, inflation targeting and all of that. But what do you think would show at this meeting?
Thank you so very much. Now, let me put it this way, you've said it correctly, that the direction CBN is going on inflation target. So which means the primary consideration would be the level of inflation, and then where is the NPR? NPR has been at 18.75 for several months right now. But when you now look at the differential between NPR and inflation rate at 20.92% for December, that will possibly suggest that CBN may mark up the NPR. But if you look at the other side of it, which is to correct the trade inflation in Nigeria, that is not largely driven by interest rate. What is driving the inflation rate in Nigeria is largely food and, of course, cost. So, and the CBN governor said yesterday in his remarks. Now, if we expect the pump and price of petroleum products to drop, refine locally and supply the market locally. What that will do to us is that the price is going to reduce for one simple reason. 85% of what you are now paying today is accounted for the cost of importing those refined products and the exchange value of the naira. So the moment we don't need to import those refined products, that means the element of exchange pricing of refined products will drop out. That's the first thing. So in which case also, there are chances of that rating. So if the cost of energy drops, then we expect that the next data for inflation to be for January most likely will be out before MPC meeting. So that means it will send a signal to the decision makers in MPC that clearly we are seeing the impact of that in inflation. So quick means what is most important now, collaboration between monetary authorities and fiscal authorities. So all active the fiscal authorities are, and of course, like the finance minister also yesterday, that this year about 70% that goes to the financial account be coming from Federal Revenue Service, which means essentially there will be more efficiency there, and also it will become more effective. So if for long, that means there's a likelihood that inflation data for January 24 will tick lower than we had in December 2022. Don't forget that Dangote Refinery by February to be supplying PMS to the domestic market. So if that happens, that means we see the effect of that on major refined product elements. Number one is aviation fuel. The second will be diesel. And the third one, by all means, will be PMS, that is petrol, as we call it commonly in Nigeria. So it then means that when inflation ticks down, and there's a whole lot of effort also being made by the fiscal authorities with respect to the interest space. So if all of this happens, then we expect inflation rate to tick down, and that will be something. So on that consideration, what is the state of the banking industry? Our banks, as of today, are doing very well. So if they are doing well, there's no need to panic. Therefore, and of course, liquidity system is also not out of control to warrant ticking up payments. So in which case, the MPC will likely move in the direction of either ticking down by maybe 25 basis points or basis points, the MPR from where it is right now. Which they do, it sends a signal to the banks. That's the direction to take interest rates. That also because investors in other segments of the financial market. And that is the interaction that we see. So it's a very, very significant strategic meeting for every investor locally and for international investors to look at Nigeria.
Well, interesting as usual. It's always nice having you on the program. Dr. Biono Adedikpe is the Chief Consultant to be Adedikpe Associates Limited. Thank you so much. We'll see what happens, and definitely we'll talk more about this when the decisions are made. Enjoy the rest of your day.